For most of you, buying a house will most likely be the largest purchase you ever make in your entire life. If you haven't watched parts 1 or 2, I recommend doing so first because this part 3 will focus on what happens during escrow. This is Alex with Sinspiration, the only place where I inspire you to develop a growth mindset. You have just signed your purchase agreement to purchase a home and gave your earnest money deposit. You are now in escrow, which I think is the most stressful part of the entire home buying process. But don't fret, I'm here to simplify it for you. A home inspection is highly recommended. Your real estate agent should find a trustworthy and licensed home inspector to do the inspection for you, or you can find one yourself. Make sure you read through all the reviews. The inspection usually happens within 1 week after the contract is signed. It's a good idea to attend this yourself with your real estate agent. As a new homeowner, it is your responsibility to understand the status of your home. Whether the issues are major or minor, you'll want to note all of them down. Then work with your agent to determine how to respond to your seller. For major issues, you can reopen negotiations with your seller and ask them to fix these issues or provide you with the credit to fix it on your own after closing. This will save you a lot of time, money, and headaches. For example, water damage can be very serious down the line, so get them fixed. For new construction homes, you can have your builder fix major and minor issues. From my experience and my friend's experience, there are a lot of issues. The good news is these builders usually offer a 1-year fit and finish warranty where you can submit requests. Get everything fixed. A new home should be perfect. Your loan needs to be finalized with your designated lender. You can go with the lender that gave you your pre-approval, but it's better to go with the lender that gives you the best deal. By this, I mean consider the loan with the lowest interest rate and or with the most incentives towards closing costs. Here is a summary of the most common loan options that are available to you. 30-year fixed. The interest rate stays the same throughout 30 years. This is the most stable and what I recommend to most people. It will also give you the lowest monthly payment out of all the options that you have. 15-year fixed. The interest rate stays the same for only 15 years instead of 30, so you'll pay off your mortgage faster. But note that your mortgage payment will be significantly larger, and it'll be harder to qualify. The interest rate is lower than that of a 30-year fixed though. 5-1 ARM, adjustable rate mortgage. This means you'll have an interest rate that is fixed for the first 5 years, and then every 1 year after, it will reset to the current market rate. This is advantageous if you expect interest rates to fall down in the coming years so that you can refinance at a lower rate with a 30-year fixed, for example. There are other variants such as maybe 10-1 or 7-2, any other different types of combinations where the first number is the number of years in which the interest rate is fixed. The second number is how often that rate will change. If you plan to sell the home within 5 years, then this might also be a good option for you. Note that the 5-1 ARM might have a lower fixed rate for the first couple years compared to that of a 30-year fixed mortgage. FH loans are Federal Housing Administration backed loans. These have a lower down payment requirement, which might be 3.5%, and also require lower credit scores to qualify, 580 minimum. The downside is you'll have something called mortgage insurance premiums, MIPS, which is a percentage of your loan amount. And you even have to pay about 1.75% upfront in closing costs. And remember, if you give a down payment less than 20%, you will have to pay private mortgage insurance. Jumbo loans. These are loans where the loan amount exceeds the conforming amount of $766,550 in 2024 for most homes in the US. It does have a higher interest rate and it is harder to qualify. So you will need a credit score of at least 700 and a very favorable debt-to-income ratio. Jumbo loans can apply to 30-year loans. When shopping for loans, don't just consider the interest rate. Pay attention to the points that you have to pay. Points are used to buy down the interest rate on your mortgage, usually in increments of 0.125%. 1 point is 1% of your entire loan amount. A $500,000 loan with 1 point is $5,000 that you have to pay during closing. Think of it as prepaid interest. I recommend paying 0 points unless the rates are not going to be lower for a very long time. For example, if you can pay points to get an interest rate under 4%, then that might be a good idea because historically, interest rates do not fall below this number for mortgages. I typically like to find out when is the break-even point between getting a mortgage with 0 points versus paying some points with a lower mortgage interest rate. Lenders may also offer incentives towards closing costs. For example, it might be a free appraisal, which is a $350 value, or a few $1,000s. If you are buying a new construction home, you will usually get a lot more incentives when you use their designated lender. That is what I did. Once you decide on one, you'll need to fill out a loan application to your loan agent. Just like your pre-approval, you'll have to provide your W-2s, tax returns, income statements and pay stubs, bank statements, all of that. Your loan processor will help you go through this process. There will also be some disclosures, loan estimates, and other paperwork for you to sign. Your lender will then request an appraisal for your property. There are 3 scenarios. The appraisal comes in equal or very close to your offer price. In this case, you are good to close. The second is your appraisal comes in higher than your offer price. Now this is the best case because this means you are getting a good deal on this property and you will have instant equity. You're also good to close. The third scenario is if your appraisal comes in lower than your offer price. In this case, the lender sees it as you're overpaying for this property and they will not approve the full loan amount. You will have to make up this difference in cash with a larger down payment through your closing costs. Another option is you can renegotiate with the seller for a better offer price. Or if you think there was an error or it's inaccurate, you can request another appraisal. When the underwriter approves your loan, you are in the golden lane towards closing. Woohoo! Up to 5 days before closing, you will need to lock in your interest rate. I remember I would read the news every single day, pay attention to what the Federal Reserve has to say about increasing or decreasing rates, and also just the general sentiment of the economy to see if the rates would go up or down. Now, if you wait throughout the month, you might get a lower interest rate, but there are times where the interest rate will slowly inch up, and at one point, you will have no choice but to lock in your rate. Periodically, you should ask your loan agent what the day's interest rates are and let them know by the end of the day that you want to lock the rate. You'll also need to shop around for homeowners insurance. Your lender can recommend you one, but you should get quotes from several providers so that you get the best cost for coverage. I've considered popular providers including Farmers and Geico for my house, but in the end, I decided to go with the provider that my lender recommended. It is called Hippo Insurance, and surprisingly, you've never heard of it, but it gave me the most coverage for the lowest costs. So it was a no-brainer for me. This is it. It's the final week leading up to your closing date. You can choose to do a final walkthrough so that the house is in the condition that you expect and check that the seller did all the fixes that they promised. By this time, you should have your down payment and closing cost funds already in your checking account. If you have stocks, you should have been selling them throughout your time in escrow or even earlier. When your title company has the documents ready for signing, your title company will notify you and you'll set up an appointment to go in person to sign them in front of a notary public. You will also bring in your down payment and closing cost funds, which can either be wired or be in the form of a cashier's check. Wiring is the default method and it happens instantly. But something that you should pay attention to, and this is super, super, super important. Only follow the wiring instructions that your title company provides to you on their secure site. Not from email, not from text, not on the phone, nowhere else, just their secure site. The last thing you want is to wire your funds to the wrong account. And we're dealing with a large sum of your hard-earned money. You should test sending 1 cent first and make sure that they receive it. I prefer using a cashier's check because it's safer than wiring, because only the designated person or organization, in which case is the title company, can cash in my check. I remember casually walking into Bank of America, going up to the counter, and then asking the teller, hey, I want a cashier's check. And then I wrote down a 6-digit number. Man, that was exciting. Note that it takes a few days for the cashier's check to clear. And so if you are opting for this option, you will need to go and sign your papers about 3 days prior to closing rather than the day of. And here it is. As soon as the county records the documents with the sale of this house, you will receive your long-awaited keys. Congratulations! You are now a home owner. Now you can start moving into your home. Remember to set up your utilities, including gas and electric, water, internet, and trash service, depending on what your HOA provides. Hey, I know the home buying process is a long one. Thank you for sticking with me through this 3-part series. I hope that you learned a lot about what it takes to start your home search, especially if it is your very first time. Even though home buying may not be on the horizon for you, bookmark these videos and keep this knowledge in mind. Also, if you have friends and family who are looking to buy a home, please share this with them so that they have the knowledge as well. In addition to being financially literate, it is also important to be real estate literate. Hit that like button and comment below with what you thought about this 3-part series on starting your home search. Watch parts 1 and 2 if you haven't already. Support my channel by subscribing to get updates on new videos, and check out my page for more content on how to grow your mindset. You've been inspired today. Welcome home, homeowner.